Okay, hi everyone. In this video, I'm going to answer or work through my answer to June 2013 question 4. So this question is looking at accounting for accrual and prepayments in the ledger accounts. Now, I've actually just answered this and I've not saved the answer properly. So rather than redo this all, I'm just going to talk you through my thought process. So in this question, in the first part, what you're being asked to do is use the info provided and put together a ledger account. You are then asked to define accrued expenses and prepaid expenses. Now really, to put this together, you actually have to have an understanding of what these terms are. So I'm going to answer this question backwards. I'm going to do the written element first to make sure we're happy with these definitions. So first of all, you're asked to explain the meanings of accrued expenses. So accrued expenses, and if you want help with definitions, you've got your revision guide, are when we have paid for, it's when we've used an expense in this time period but we've not paid for them yet. So in this instance, it's a liability for the telephone services that have been used but have not yet been paid. Now that would get me probably 1 mark, and this is a 2-mark question, so I'm going to add some extra detail. In the income statement, if we've got accrued expenses, our expense figure will increase, and it also would be recorded the accrued amount only as a current liability. We have used the resource, but we still owe, in this case, the telephone company for it. So that's a bad thing, it's a current liability. Prepaid expenses are opposite. Okay, these are when we've paid for the use of the expense, however, we haven't actually used it yet. So an expense that has been paid for in advance, and this service will be used in the next financial year. In the income statement, that will reduce the expense figure because that doesn't belong on this year's expense, it's an expense for next year, and it will be recorded as a current asset. We've paid something in advance, that is a positive thing. So what I'm going to do then is I'm going to use that understanding of my key terms to actually answer this question. Okay, so we're going back to question A now. So we are helping Atif to prepare his year-end financial statements at the 31st of March 2013. So that is the year-end. And we are given a summary of transactions on his behalf. These relate to telephone expenses. So what I'm going to do is I'm going to read this and I'm going to plan it using pearls, and I'm going to pay really close attention to dates. So we are given here information about prepayments and accruals at the year start. So these will be the BAL-BDs in the ledger account beneath. So all I'm going to do to plan these to decide if they are a debit or a credit is use my understanding of my key terms. So telephone rental prepaid expenses, that's a good thing, we've paid for something in advance, that's going to be an asset BAL-BD. Okay, it's also possible though, especially with something like telephones, is to both have prepaid the company for something. So in this case, we've prepaid on our line rental, but we owe them for call charges, so we can have 2 BAL-BDs. So here, we also owe them at the year start £515. So if we owe them, if we've got an accrual, we've also got a liability balance. Throughout the year, okay, so we've got our year-end details now. These are our year-end details. We can see we paid or we gained an extra £190 worth of telephone expenses. So we've increased an expense. Alternatively, decide if that's a debit or a credit. You could think about the opposite account involved. We've paid checks. So the bank account here would have been credited. So this is going to have to be a debit in our telephone expense accounts. I can also see at the year end, like the year start, we've got a prepaid amount and an accrued amount. So again, we've got 2 BAL-BDs. This one is an asset BAL-BD at year end because we've prepaid for the expense. That's a good thing, we've paid it off already before we've used it. And this one is a liability because we still owe the company that money. So all I'm going to do is underneath write out my pearls diagram. Okay, if I've labelled any of these with a P, an E or an A, I'm going to debit it in the telephone expense account. If I've labelled them with really a liability, it's going to be credited in the telephone expenses account. So first of all, I'm going to record this one. Okay, so it's an asset Bal BD, so I'm going to put, okay, the date's 0104, Bal BD 420, and then I'm going to tick it off. Okay, for the second one, I've got a liability Bal BD, so I'm going to put that on the credit side, liabilities go on the credit side, and that's of 515. Throughout the year, we gain another £6,190 worth of the expense. Expenses go on the debit side, so I'm going to record that. I am then going to work backwards, okay, and record my Bal BDs at the year end. So at the year end, I have an asset, so a debit Bal BD of £680. So I'm going to go right to the end of my account. I'm going to work backwards to get this number. For every Bal BD, there's a Bal CD, so then I can put this number in. Okay, I can then record the final bit of information. On the 31st of March, the year end again, we also had a liability balance of 485. So I've got a liability balance of 485. For every Bal BD, there is a Bal CD. All I'm going to do to finish this account off, okay, so at this point I wouldn't have this information, is I'm going to find which side has a higher total. And in this side, it's clearly the debit side. The debit side equals £7,095. So what I've done is I've written that total on the credit side as well. I've then done 7095 and taken away the two numbers here, and that gives me 5,900. This figure represents how much expense was used this year. So the business paid for this much, but they actually only used this much. This is the figure that we want to go on the income statement. So this year, the business has used £5,900 worth of telephone expenses. Now, I've actually fully answered the question now, but it could be at this point in the exam you were asked to do an income statement and a balance sheet extract. To do that, all we would do is the following. So the expense figure, okay, income statement to income statement is £5,900. And from the balance sheet extract, I've done the planning. I've got a Bal BD at the year end of 680 as a current asset, and a Bal BD at the year end of a current liability of 485. So all I need to do, okay, is put prepaid expenses 680, it's an asset balance, okay, and current liabilities 485 as a liability balance.